Welcome to Deal Dialogue.
Hello and welcome to Deal Dialogue, a discussion on all things related to M&A and financing. I'm Rob Hickey with RBC Mid-Market M&A. Last time we talked about venture capital. In a continuation of this theme, today we are going to focus on another form of financing called mezzanine capital. We'll discuss what it is and how it works. Joining me today, along with our production engineer, Tarek Chami, is Joe Rodriguez, a managing director in RBC Mezzanine Finance. Welcome, Joe.
Thanks, Rob. Thanks for having me.
Joe, what is mezzanine finance?
Well, Rob, mezzanine finance is a broad term used to describe a form of financing that ranks junior to the senior lenders, but ahead of the equity in terms of the priority and claim of the assets of the business. The term mezzanine is akin to the mezzanine level in a building or a concert hall, which is above the ground floor, the senior debt in this example, but below the top floor of the equity.
I've also heard the term sub-debt used. Is this different?
Rob, that's a great question. The term mezzanine capital is actually a very broad term, and it can encompass a number of different instruments, such as second lien debt, unsecured debt, warrants, and other equity-like instruments. In Canada, when professionals refer to mezzanine finance, they are generally referring to second lien debt, which is a form of debt that takes a security position behind or second to the senior lenders, which in Canada is typically a bank. The mezzanine debt in the Canadian market may also come with equity-like return enhancers.
Speaking of equity, how does mezzanine capital differ from equity?
Also, another great question. Mezzanine capital, given it is a financial instrument with generally debt-like features, will often be non-amortizing and have all the principal due on the maturity date. The benefits of using mezzanine capital versus equity can vary, but for private companies, using mezz in the capital structure can sometimes alleviate the need to bring in a new equity partner, which would require dilution of the shareholder group while also carrying the benefits of being able to repay the mezzanine and with minimal or no additional costs. This compares to an equity financing, which becomes a more permanent form of financing and would require a willing seller in order to be removed in the future. Also, the cost of mezzanine financing is typically capped or fixed, whereas equity financing could have an unlimited upside, making mezz a more attractive form of financing for the current shareholders in the business, which should lead to higher returns on equity.
When do companies seek to use mezzanine financing?
Typically, mezzanine financing is generally used to fill a funding gap where there's insufficient capital from the senior lenders or the equity to support a specific milestone. A milestone generally falls into one of three buckets: a growth event, which could be an acquisition, but may also be an organic growth project; the buyout of a shareholder, or some other form of transition to the ownership of the business, such as a management buyout, often referred to as an MBO; or a payment of a meaningful dividend or other form of distribution to the benefit of the shareholders, typically for the purposes of diversifying their net worth.
Joe, I don't want you to give away any trade secrets, but perhaps it would be helpful to understand how, at a high level, mezzanine is priced.
That's $1 million question here all the time. I hear that all the time. Mezz will carry returns that are commensurate with its risk profile, typically between that of the senior and the equity target returns. Mezzanine finance, when used appropriately in the capital structure, should enhance the return on equity for the shareholders of the business. Given the primarily debt-like feature associated with mezzanine capital, the desired returns for the mezzanine investors, as mentioned already, are less than equity, but will generally carry the added benefit for the borrower of being tax deductible, resulting in an overall lower and more efficient weighted average cost of capital for the business.
It's a helpful understanding. It's a complex product. Can you talk to us a little bit about how it's structured?
In Canada, mezzanine capital typically charges a one-time upfront fee on a commitment of capital, plus an interest rate. However, unlike senior debt, mezz loans typically allow a portion of the interest rate to be deferred or added to the outstanding loan balance. This option to defer a portion of the interest rate can be attractive for high-growth businesses that would like to maximize the availability of operating cash flow to fund growth. Also, depending on the economic cycle and the specific circumstances of the borrower, mezzanine capital may also require a small form of equity-like return enhancer, such as warrants, which are an option to purchase shares in the business at a future date.
Can you give us some insight into the typical mezzanine investment process?
Mezzanine capital providers will typically conduct a more thorough diligence than what companies have experienced with their senior lenders, and at a high level will often include a review of customers and suppliers and their contracts, as well as reference calls with a few of these, analysis of the most recent 3 to 5 years of operational performance, a review of the business prospects, including a management prepared projection over the expected life of the loan, meeting with management team and or the private equity sponsor, plant tours, third-party quality of earnings report where a recent audit is not available, as well as a review of management employment contracts, insurance documents, IT infrastructure, review of environmental reports, and the overall organizational structure.
That sounds like a fairly thorough and substantial process. Understanding that you can't talk about a typical time frame, what does a process look like in terms of the amount of time you spend on it?
Yeah, well, it could range anywhere from 4 to 8 weeks. It really depends on the availability of information. A lot of times when we're dealing with a company, it's the first time they've experienced this type of capital investment, and it could require a lot of time invested by both the management team and the mezzanine finance team in order to gather and collect the information required for the analysis.
So a lot of work is put into the sourcing and the actual investment process. Once you've made the investment, how do you monitor it?
Typically, Mez will receive monthly internally prepared financial statements from their investee companies, as well as quarterly compliance certificates, attendance as observers at quarterly board of directors meetings, as well as audited annual financial statements and annual budgets. However, a good mezzanine provider should be able to act as a collaborator, providing assistance and support for discussions with senior lenders and provide overall financial structure and advice for growth or other strategic initiatives.
When and how does mezzanine capital get repaid?
Ultimately, mezzanine capital is typically repaid by our borrower's internally generated cash flow or refinancing with a senior lender.
Speaking of the senior lenders, how does the mezzanine relationship work with senior bankers in the structure?
Typically, we try to work collaboratively. At RBC here, we take a very collaborative approach with both the borrower, as discussed, and with the senior lenders. We want to make sure that the capital structure works for everyone involved.
And is there a difference? We won't talk about specific banks, but we have mezzanine finance, other banks have it. Is it different when you're a lender in a structure with RBC versus other banks? Is there any advantage or disadvantage to having banks as the senior and mezzanine in the structure?
At RBC, we take an approach where we have a very collaborative approach, and we have a pre-approved intercreditor such that it will save on legal costs and time and effort expended by both the senior lenders and the mezzanine lenders in coming to an arrangement on the intercreditor.
Are you often the only mezzanine lender, or have you done deals with other mezzanine lenders in the structure?
Both. We have partnered with other mezzanine providers in the country, and we've also acted as the sole mezz provider. It really depends on the situation and the circumstances.
Do private equity firms use mezzanine capital in their investment structures?
Some do and some don't. It depends on the situation. Not all companies are ideal for mezzanine capital given the high cost. It may depend on the returns that private equity is looking to achieve. But also in certain businesses, private equity realizes that mezzanine capital can be used to engineer higher returns on equity.
How would you characterize the current market for mezzanine finance?
I would say mezz, similar to the other layers in the capital structure, there's an abundance of capital right now for senior mezz and equity from senior mezz and equity providers. And I would say that there's a number of mezzanine capital providers out there. However, it's important when you're considering a mezzanine partner that you really look to the team that you're partnering with as a long-term relationship that will fit with your broader goals and objectives, and someone who will be with you through thick and thin.
I know we touched on this a little bit earlier, but I wanted to just bring this particular point home. If you're an advisor to a company, whether you're a banker or a lawyer or a consultant, Specifically, what situations would be helpful to identify a potential need to have a discussion with an expert like yourself on a situation where mezzanine capital might be appropriate?
I always advise people that I'm speaking with that mezz is almost always useful as a consideration for a financing tool when there's an event that's occurring. And really, if there's some form of event that is unique to the business and to the shareholders of the business, mezzanine capital should be a consideration, because there's a lot of flexibility in how mezz is structured, and the right mezzanine partner for the business should be able to come up with a structure that will be able to potentially help a business when they are going through one of these events.
Great. Joe, this has been a great discussion. Thank you for being here today.
Thanks, Rob. Great to be here.
That's it for this segment of Deal Dialogue. Our guest was Joe Rodriguez, a managing director in RBC's Mezzanine Finance Group. Our production engineer is Tarek Chami, and I'm Rob Hickey. Thanks for listening, and good luck with your deals. Deal Dialogue is a production of RBC Mid-Market M&A.